Hi and welcome to Westpac London's end of day financial markets report for Tuesday, August the 2nd. Not much to report on the economic data front. One piece of information I will mention in a second, but the big story really today was the continued huge sell-off in equity markets in Europe and the US, the increase in risk aversion, and also some sharply higher yields in some of the peripheral or less peripheral European government bond markets of Italy and Spain. Basically what's happened, we've seen the House and the Senate pass the pretty pathetic debt ceiling agreement. President Obama has pledged to pass it, so that's done and dusted. That's going to go into law. We, as I've said in previous reports, we think this goes just very shortly down the road in terms of delivering any sort of fiscal stability for the longer term in the US. But that's an issue for another day. Markets are now focusing more on the growth story in the US economy. We saw weak economic growth figures published late last week. Yesterday was the weak factory survey, and today we saw weak consumer spending numbers for the month of June. Now they weren't actually fresh news because we already had the quarterly total. Nevertheless, the publication of the first monthly decline in personal spending for 2 years was just another cross to bear, if you like, for investors who are just worried about the prospects for growth in the US economy, the implications of that for earnings, and also the implications more generally for the broader global economic story. And that's then had a bit of a feedback loop into Europe, where there are concerns about the sovereign issue, the sovereign debt issue, have started to re-intensify again. We've got the US out of the way, so it's back to Europe, and the issue today is that weak economic growth, or weaker than expected economic growth, will make it even harder for European governments to get their budgets back into order. So today we saw Italian bond yields rise to 6.1%, Spanish bond yields rose to 6.25%. In Italy's case, that's the highest they've been since this crisis began, well, the highest they've been since the euro started. And the sort of rule of thumb that we operate on is that once you get to around 7% for 10-year bond yields, it basically becomes very almost impossible for you to actually fund your budget deficits when they are of the magnitude that many of these European governments have. Italy, Portugal and Greece all basically had to seek bailouts when their bond yields rose to those sorts of that 7% level. So there's concerns that contagion, not so much from what's been happening in Portugal, Greece and Ireland, but contagion from the weaker growth story that's emerging in the major Western economies. Contagion from that is now hitting the European sovereigns of Italy and Spain. And that in turn has seen bank stocks in Europe continue to plummet. The weakness in equity markets was very much apparent in the US as well. The Dow was down today for the 8th day running. It's shed well over 700 points in that time. Just to give you some numbers, we've got the Dow today down 1.3%. It's at 11,971, below 12,000 again. And in Europe, the FTSE was down 1%, the French market down 1.8%, and the Germans were down 2.3%. So some pretty big losses there. Commodity markets weren't so exciting today. Just to give you a couple, crude oil prices down 1%, $93.90 a barrel, and gold up about 1.4% at $1,644 an ounce. One of the other financial market variables to take a bit of a hit today was the Aussie dollar. Fell from 1.10, $1.10 US, during the Sydney trading session on Tuesday. It's now trading around 108. So we've seen a 2-cent drop in the Aussie dollar on these concerns about weaker global growth coming through. The focus over the next day or so, well, in Australia you've got retail sales figures for June and also the quarterly figures. They will give us an important update on how the Aussie consumer is doing. And we get an early read on July employment with the publication of the ADP private payrolls estimate, which we think will show another fairly weak outcome. Our forecast for the official payrolls numbers coming out on Friday is a below consensus 70,000 increase in employment. Okay, so plenty to look forward to tomorrow and over the rest of the week. I'll speak to you then.